Welcome back to the Big Skinny with Lou Basenese, where today we're digging into the oil and gas sector, industry that I've called my home since January of this year. And it's a great pleasure of mine to introduce you to our next guest, who's been in this industry for far too long, seen the ups, the downs, and we're both expectant of a future up. Ed Kovalik, CEO of Prairie Operating Company. Welcome to the show, Ed. Hey,
thanks, Lou. It's great to be on with you.
Yeah, so listen, it's the topic of the day. How low can oil prices go before they rebound? You've seen this, you've lived through up and down cycles. What's your feeling for the sentiment right now, and what really turns us around? What's the pivot point?
Well, the last time I asked myself that question, oil actually went below zero, which I don't think anybody thought.
Don't do that, Ed.
I guess we were paying people to take it. But, it's interesting because consensus now seems to feel like we've got potentially some build growing into the back half of the year. But then, not to worry, there's a supply constraint. OPEC is kind of, at its tips in terms of spare capacity, and demand keeps growing pretty consistently. There's been a lot of talk about China, obviously. But all in all, for a whole lot of reasons, I tend to be a, oil bull, thinking that, it probably should be valued a good $20 more than it is today.
Yeah, and you see that just on the demand and supply dynamics. What if we factored in inflation? I mean, where should oil be? I mean, you and I have talked about this a bunch before.
Yeah.
We've gotten spoiled by cheap oil, and it didn't participate in the inflation trade, so it's undervalued even on real dollar terms.
Yeah, no, that's absolutely the case. If we had the technology to build a time machine and go back to the beginning of shale, when it was developed 20 plus years ago, the whole industry was kind of built on the back of what I'd call, a $65 long-term price for oil. That was before inflation happened. And today that's probably about, $20 of inflation that we've experienced in the last 20 years. So kind of a buck a year.
Yeah.
So today, on a post-inflation basis, we've kind of got like $80 oil. Put differently, on a pre-inflation basis, oil today is really trading at about $40. So it's incredibly cheap.
Yeah, incredibly cheap. Josh Bison, I keep messing up his name. Josh Young from Bison was on before, and he said that, some people are saying the sweet spot's 70, but he thinks it's north of 100. I think we both tend to agree on that. If we get to $100 oil prices, what does that change very quickly? I mean, obviously the profitability goes up, right? But where does that mess with demand and just the economic implications of that? Because I think people now say, and the president himself is pushing for lower oil prices, but that's not necessarily good for the industry, or it's only good for consumers. Where does that balance out if we flip too high to the upside?
Well, what's interesting is that historically in a higher price environment, you saw the industry overproduce. Today, when you look at the whole industry and kind of divide it up into OPEC and then the US and review them differently, it's frankly hard to make a case that the industry would overproduce because, a lot of folks think that OPEC is already kind of producing its max output, and that, they've already kind of unleashed spare capacity. So I'm not sure you'd see a lot more productivity out of them. With respect to the U.S., most of the oil we produce in the U.S. is through shale drilling. And the dynamic with shale drilling is that the decline from new wells is really, really steep. So just to maintain our 13 plus million barrels of production daily in the United States, we're having to replace, 40% of those barrels every year. So I'm not sure how much we could really grow, even if we all wanted to capture higher prices. Now, a lot more inventory in the United States becomes economic at higher prices. At these prices today, inventory is really scant.
Yeah, I shared that chart before. We can bring it up again on the Permian, right? That you and I have talked about, where under 60 or under 50, forget it. You've got about 3,000 wells of inventory that's available, which really would change the dynamics. So against this backdrop, explain why start, with Gary, your co-founder, why start an oil and gas company roughly 2 years ago, again, at a time when, ESG was the buzz of the time, all renewables. It was an energy transition away from fossil fuels completely. I help the audience understand what gives you the guts to do that.
It's funny you asked that because everybody told us it was so wrong to do that, but it felt so right. And the reason it felt so right is because, there's a scarcity value to the commodity for all the reasons I stated. Now, is there a lot of oil? And, in my opinion, sure. There are a lot of discoveries left to be had offshore and in other locations. But the problem with that is it takes a lot of capital. You're talking about tens of billions of dollars that haven't been invested annually over the last 10 years or so to really develop these, larger discoveries. And then from the time you discover those, you need about 7 to 10 years to bring them on. So I think ESG, that whole narrative really did a disservice to the planet because it basically suggested, hey, we don't need to spend tens of billions of dollars a year, on new discoveries and new development because we're not going to need the oil. Well, fast forward to a future where we need the oil and we didn't make those discoveries, then, as Josh probably kind of voiced, we're looking at much higher oil prices. So, that's why we started the company. We think there's a fundamental scarcity value to the commodity. We're running out of inventory. And, that's why we're trying to get our hands on every great location we can.
Yeah, and so we're not really about exploration. We always say it's exploitation, which has negative connotations to it, if we can get another Asian word in there. But got a question here kind of long term, right? So you have the genesis of forming the company because there's scarcity and value in that. Where do you build to from Chad here saying, can you explain the long-term strategic plan that's going to restore shareholder value? And what's our accountability for this? I mean, we never tread gingerly. We address this head on. So what do you think of this?
Yeah, no, that's a great question. And look, from the beginning, our plan has been really simple, which is to consolidate the DJ Basin and to build a high growth company, both through acquisitions and through the drill bit. We've done, 8 acquisitions in just the last 2 years, but we're now beginning to grow significantly through the drill bit. We really just started that program in April and May of this year after our last acquisition, which was our largest acquisition. And so we're, really hitting exit velocity going into the back half of this year into next year, where, we see a future where our cash flows start to surpass our CapEx. And we're all about returning capital to shareholders. We ourselves are large investors in the company, large shareholders. We love dividend income. So that's our focus. We're luckily under-levered compared to a lot of peers.
Yeah.
We have no intention to become over-levered. So, our vision is to continue consolidating, but also to top off and return cash flow.
Yeah, I had a funny one. The producers asked early, should we bring up the stock chart of Prairie? And I said, yeah, sure, bring it up. Ed and I never shy away from it. Then I realized the stock started going down when I joined the company in January. So I think we need to blame me for it. So I'll take all the blame. But against that backdrop, I mean, you're sharing, we have a long-term plan here. We're not fast money. This is I look at it, it's like round 2 of a championship fight in terms of duking it out for whether oil and gas is going to be prevalent and higher priced. What do you see? How do you say to the people that, we get the same questions? How do you turn this around? What are the objections people right now say to purchasing shares in the market, and how are we addressing those things?
So at the time we did the last acquisition, which was a $600 million acquisition, it was more than 10 times the size of our company. And so whenever you do a transformative, minnow swallowing a whale kind of a deal, it's tough to finance that. We were lucky enough to get a great bank syndicate together led by Citibank to fund most of the deal. And we were frankly fortunate to have, our preferred shareholders come in for $150 million to finance that deal. Now, was that an expensive transaction? Yes, but deservedly so because of, frankly, what I just described in terms of how impactful that asset acquisition was. But our perspective has always been that, oftentimes you have to do financing for M&A, but it ends up really being bridge financing. And, we have the ability to redeem this financing. We're now significantly larger than at the time we did that acquisition, not only as a result of having done the acquisition, but also because we're growing substantially through the drill bit. And as a result, we have access to lower cost of capital. So, we're working tirelessly to eliminate the overhang on the stock that the preferred transaction has been. Fairly, though, I would point investors to the fact that very little of the preferred investment has actually converted into shares. So it really hasn't been substantially diluted to date.
Right.
I also respect the fear of dilution. And that's why the stock is trading at sort of a blowdown value, assuming full conversion of the 129 million of that preferred stock left. But we're not really afraid that that's going to happen because we think our ability to take that out is pretty strong.
Yeah, no, I think that's the overhang too, as I talk with shareholders and different investors considering it. So let's go back. I mean, you've been in this industry for a decade plus, banking as well. So you've seen every type of opportunity, over levered, under levered. You've also seen real pivot points in the industry. And maybe it's worth explaining to people how quickly conditions can change. I mean, maybe from your past, you can share an experience of where, oil goes from 50 to 75 and stock prices. I mean, Josh was hitting on it, like coming out of the COVID lows, there were companies that were up, 5 to 10x because they got so oversold. And I think that's the situation we find ourselves in today. So what have you seen in the industry in your experience?
Well, what's interesting is that we do go through a real roller coaster ride as an industry because we are tied to, a commodity whose price changes, but we're also tied to, supply, demand, geopolitical risk, and general perception of the commodity in the markets. So today we find ourselves as an industry trading at a historic low multiple compared to any other industry in the S&P. We're the cheapest, yet we generate the highest amount of free cash. So to me, that's sort of a bullish signal that there's a lot of upside from here. Demand for our commodity has increased every year, so that's not really changing. I think that the commodity is really mispriced today. There's been a lot of talk around, does it trade with storage numbers? Well, it hasn't really, because we really bottomed out storage, under President Biden, and nothing really happened to prices. So it doesn't seem to be, storage related. It hasn't been geopolitically related because, you would have never convinced me that if the U.S. bombed Iran, we wouldn't see $100 oil.
No,
Well,
I mean, we
we
were
bombed
talking
Iran.
when it happened, right? We were talking, it was a Friday and we were preparing for 100, 120 on Monday. And then we were all shocked that it didn't happen.
Yeah. And so it seems like the financial markets are really what are suppressing the price of oil. You've got a really historic level of net shorts in the market, but none of the facts on the ground really reflect it. So there's fear of this OPEC glut. Well, if there was
Right.
going to be a glut of oil from OPEC, you would have already seen it in the storage numbers, and you're not seeing them. So I think there's a lag in terms of the market catching up with reality. We're experiencing that lag right now. And make no mistake, based on historic movements, this commodity can shoot up $20, $30 over a very short period of time. I know Josh was talking about the gold to oil ratio. That's really been blown out. So either you think gold is totally overpriced and there's really no reason to worry about, the currency trade, or
Right.
you think oil is really mispriced to the downside and it ought to be more. Now, I'm all for low prices, but they're really screaming cheap right now. And we don't need screaming cheap prices to fuel this economy. It's not as if $80 oil is going to tank the economy. If our economy can't survive, $20 in oil prices, we don't have a very resilient economy. So, there's a lot of room to the upside from here.
Yeah, no, I agree. I mean, we showed the chart earlier too. Breaking even for the Saudis is at about $90 a barrel. So there's a gravitational pull that's eventually going to go the opposite direction, pulling prices upwards. I appreciate you giving the perspective here about what we're doing at Prairie on the macro view. And look, we had this slide earlier that it was, you just need to be patient when it comes to oil and gas investments. And I find that's often the case with contrarian trades is you got to be patient because things happen gradually and then suddenly. So just encouraged by the plan ahead. Any final thoughts for any of our shareholders that might be listening right now or people that are considering looking at Prairie and what you have planned ahead?
Yeah, look, obviously I love our story. I think we're on the right path as a company. We're putting our money where our mouth is. Every window of opportunity we have, we're all buying stock, even though we own a lot of it to date. So, I'm fully bought in. I think our team is fully bought in, and our growth, is going to start showing up here as we've told everybody. Tail end of this year, a lot of the wells we're bringing on are coming. We've got a lot to sort of talk about in the back half of the year. We remain excited about the M&A environment. We're in a great financial position. We're really well hedged. So, we've got nothing but good things to kind of look forward to as a company. And I think if shareholders stick with us, they'll figure that out as well.
Yeah, well said. Over 11% insider ownership and hedging. That's north of 65 for this year. So even if prices are falling, we're still got cash flows locked in. So Ed, I appreciate you making the time on a Monday afternoon and a crazy market to tell the story and share your insights. We'll look forward to having you back on, man.
Great being with you, Lou. Take care.